become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Seth Udinsky, Samuel Case, and your host, Mark Manila, on with us. Mark, I'm excited to be back, brother. It's a good day, isn't it?
Yeah, welcome, everyone. We're glad you're here with us. Thanks for joining us this day. Winning Wednesday.
It is a winning Wednesday, Mark. We're going to talk about some at least one win that we got. There's actually a couple wins here that's been going on, but we'll highlight one of them later today. I'm looking forward to that.
That sounds good.
Yeah, it's going to be fun. 610-363-1110, folks. We want to hear from you. 610-363-1110. You call in right now. You'll be the first caller in the queue, and we'd love to get to hear from you. If you got a question about your portfolio, the markets, the economy, what's going on in the world, anything that's on your mind, we'd love to hear from you. 610-363-1110. Don't be shy. We'd love to get to talk to you here. Mark, let's open it up here with a little bit of a sector analysis. I think that's a good thing for us to look at here, especially when we consider that all of us, if we're investing with the FISM model, but even if we're not, we will probably have to interact with a wide variety of sectors during our investment life cycle. So let's just start with this here, Mark. What is sector analysis? Can you give us that definition?
Yeah, bottom line is it comes down to looking at the different sectors of the economy, breaking up the different companies that have similar products that are in that sector, or just that are in that sector, and maybe even have different products but support that sector. That's all the sector divisions are. Now, it could be as small as half dozen to 40 or 50 different sectors, depending on how you want to break it down. Most people don't even look at this. There's a lot of investors who just don't even care about what sector something is. They only care if it's going up or going down, which, by the way, that's why we invest, is trying to find those stocks that just continuously go up, and that infinite pursuit of the holy grail of stocks, right? So a lot of people don't look at that, but many do, especially when it comes to diversification. One of the reasons we diversify is to help smooth out that roller coaster of the stock market as we're continuing a long-term investment journey. So we can do that by investing in different parts of the economy, because different parts of the economy do better at different times. And, we'll see probably an uptick of the economy looking at consumer cyclicals in the last quarter, oftentimes because of shopping, Christmas shopping, holiday shopping, things like that. So those things that normally wouldn't be a staple will be purchased more, and so we'll see an uptick in that area. Sometimes we'll see different things like energy will start taking over as energy becomes either scarce or over-regulated, so energy starts getting stronger and stronger at times, and we may want to move into that area, or we may find stock ideas in that area. So the bottom line, when it comes down to looking at different sectors of the economy, is it's one way to find some good buys as we see one sector of the economy growing stronger over another. And on another way, it's a way to take out some of the highs and lows in your portfolio by diversifying into different sectors, and therefore into different companies in those sectors. That's a long definition, but I'm sticking to it.
Mark, that's helpful, brother. And so I'm sure as we look at this, we also have to keep in our peripheral vision things that are going on in the economy, even the world to a degree. We're talking interest rates, inflation, geopolitical risk, those sorts of things.
Sure.
How do those things affect the different sectors? And I know that's kind of a broad question too.
Yeah, it's broad and big, but it makes sense. That's the bottom line. It makes sense because, sure, interest rates will affect things like the banking and financial sector. We might see things like government regulation, or as we just saw with China pulling back on its magnets and all its metals, not shipping them to the U.S. anymore. Are threatening not to, and then doing some regulation on them. It could affect the mining industry as it is, I think in a positive way, by the way. We're starting to see more and more U.S. miners saying, hey, we're going to start looking for these minerals, these rare earth minerals that you're talking about, all those long-worded minerals that we need for our technology and our batteries and our lenses and all the stuff that we need for our modern society. So every little lever will affect one thing over another. For example, if interest rates are real high, we may see something like a Christmas, people not buying as much because they can't afford to put it on a credit card, or they can't afford to borrow to do it. Or we might see homes go down, so the sector of housing might go down with interest rates high. So all these levers do affect it. And that's where we come down to when we do asset allocation. One of the biggest questions we get asked is, how much cash should I have, right? Now, some people say cash isn't a sector, but effectively, when we're looking at asset allocation, it affects the sectors. If we increase sectors, as we often say, we want to increase the amount of money we have, the powder that we're keeping dry, because the markets are oversold, and we want to have money there for when it pulls back to buy into it. That affects all the other sectors in our asset allocation, so we might have to make them a little bit smaller here and there. Usually what we'll do is we'll compare the different sectors. I think in our Partners Hub, we have 10 or 11 different sectors that we look at as a larger sector analysis, and we compare each sector against the other. And the way we do that is we look at either a proxy like an ETF that covers that, or we look at all the stocks in that sector. And then how many of those are on a win? How many of those are on buy signals? And so we look at all the buy signals and compare each sector's buy signals against each other, and then it ranks it from the strongest, the one with the most buy signals, down to the weakest. So if we say, let's start pulling in more cash, let's expand from 2% or 3% up to 5 or 10% because the market's way overbought. Well, we'll have to cut a little bit out of some of the others. Maybe some of them that have ran up, but also some of the weaker ones that don't seem to have any cyclical potential for the next 3 to 6 months. So that's how we slowly adjust. And we had a question about this the other day. Will there be any major adjustments to the different sectors in the asset allocation on our Partners Hub? Well, no, there'll be no major, but there'll be small adjustments. And sometimes, for example, right now and for quite a while, technology has been the largest overweighted sector. Overweight means we're putting more into that than elsewhere. And the reason for that is it has been leading the pack, or in the upper lead of the pack of sectors, for a long, long time. When that starts falling down further and further, maybe something else will take over instead of technology. I don't see that in my lifetime, but it's possible. Then we will start reallocating some of the resources in the portfolio from technology to those other sectors. Slowly, in a slow, stable way, so that when we rebalance in some of the up and coming and the stronger companies in other asset classes or other sectors of our economy.
You know, Mark, I for one hope that, what would it be called? Metalworking, swordsmanship, blacksmithing. I hope that replaces tech, because I love swords. So.
And they're so useful today.
Exactly.
So useful.
Right. So
there's useful. Probably,
it's probably very really consumer discretionary, right?
Yeah, super discretionary. Yeah.
I think it's ultra discretionary. I don't know what it would be labeled, but swords are not high on a sub of a subsector list.
They're unique.
I'm sorry. Exactly. I'm sorry.
Can I ask about that, Mark? Actually, the subsectors, the industries, how do they play with sector performance? Can you have industries performing well within a sector even if the overall sector is not doing too hot?
Oh, excellent question. Let's take a look at that. The first thing that popped in my mind as you were speaking about that, Sam, is energy. Energy is a broad sector. It has everything from solar to any company that makes anything or produces anything or supports anything that has to do with energy. So it would entail pipelines for liquids that are transported as energy. It would have solar wind farms. It could even just be supporting companies that build the rigs or do those kind of things. So in the subcategories, you could find categories that are totally out of phase with the larger part of the energy sector. Sometimes we saw coal just tank, right? For years, we saw a coal tank, and now we're seeing it slowly coming back. And so, yeah, the subsectors affect the sectors, and those all add up to being whether that works or not, whether that's moving forward as a whole or not. So that's how we use sectors.
That's great, Mark. Folks, maybe that's sparked a question for you. And if you got one, call in right now, 610-363-1110. We'd love to hear from you. Again, 610-363-1110. We'll be right back after this break. Don't go anywhere.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month interest on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity.
To find out how you can support the life-saving mission of preborn, go to preborn.com/FISM.
610-363-1110, folks. If you want to queue your call up now, be a great time to do it. 610-363-1110. Maybe you got a question about the sectors we were just talking about. Maybe like Nelson. Mark, you have a question. Speaking of Nelson, he's got a great question here from Louisiana. This was from our chat earlier this week. Nelson's asking, after building our portfolios, when a sector has a fairly large allocation, say more than 10%, percentage per position. What do you think, Mark?
Oh, okay. Yeah, that's smart. I like the question. Well done. Great question, Nelson. Here's my thought on it, and here's what we recommend over and over again. We don't like positions getting too far out of their bucket. For example, when we see a single stock grow substantially to 10-20%, it adds additional risk. Now, there are thoughts in the background that say, hey, let's let our winners run and cut our losses quickly. But the reality is that if we do that, we introduce a lot more risk. So if we have a stock that's taken up 10% of our portfolio and it tanks in a day, then that's 10% of your portfolio that tanked. By trimming it along the way, what happens is you reduce that risk, that downside risk. Yes, you're cutting off some of the upside potential, but you can't time the market is what you hear over and over. You never know when that day is going to come, when that stock, or let's talk about something that happened recently. Gold just dropped 6% in one day. Gold is notorious for dropping huge amounts very quickly. It has run up, and now it dropped back 6% real quick. Well, if gold had taken over a larger part of your portfolio, that would have been a huge drop as a part of your portfolio. So initially, we recommend that you don't put any more than 3% into any one position in any sector. Secondly, we look at if it's grown between 5 and 10%, you really need to start considering trimming it back a little bit, taking some of those profits off the table, locking them in. And third, if it's over 10%, definitely start pruning it and doing a rebalance in your portfolio. Nelson, I loved your question. It made total sense. And obviously, this is between you and the Lord, how long you let your winners run. But the more you do it, the more risk you're introducing into the portfolio. Now, you're getting paid for it unless you miss that moment when it takes that dive. Then you've lost all that money that you gained in there. So between you and the Lord and your sleep factor, manage the portfolio wisely. That's what stewardship's all about.
And, you know, Mark, Sam and I were talking about this in the office yesterday as we were looking at our portfolios, as we like to do on a daily basis, right, Sam, and have a little fun with it. It's a good reminder that the gains and losses both are on paper until you realize them. So like you said, you can let the stock run up and run up and run up, but it's still on paper until you realize those gains. It's just a good thing to keep in mind as we're dealing with real money here.
Yeah, I think that sometimes when last night I had a cliche moment. I think in one sentence I was talking to my wife, I used 3 cliches and no valid information. but you know, like it's only paper, you know, that's usually what somebody uses when they say, well, the stock pulled back 67% today, right. No big deal. It's only on paper. But the reality is that's real. Your net worth just dropped that amount. Yeah. We need to keep it in mind when we're looking at it. Otherwise, it's real easy to just let it grow, let it grow, let it grow, let it dive, let it dive, let it dive. Over the long term, we really need to be managing a portfolio. We were put in a garden to manage the garden. God put us here to use our brains and our physical abilities to do things, to go to work with our Lord and our Savior every day. That's true in our portfolios. That's why Financial Issues is here, to give you the tools and the understanding to be able to go into that garden every day, prune it, make sure that that apple tree isn't taking over the the orange orchard, and then next month we don't have any oranges. You know, we need to keep that portfolio in a strong, stable condition, growing systematically over the long term, instead of trying to take giant leaps up and then ending up jumping over the cliff.
Well said, brother. I appreciate that. You know, you mentioned wins there, Mark, and letting your winners run. Speaking of winners, in a little bit of a different way here, we got a Winning Wednesday to get to, don't we, guys? Always awesome good. To see the things that are happening that we can celebrate. Cultural wins, whether it's in the financial sphere, the cultural sphere, or the Christian sphere. And we got one here. Sam, give us this one here. Looks like trans identification among college students is graciously and thankfully falling. Can you tell us?
Awesome news, Seth. Yeah. Yes, as of this year, 2025, about 3.5% of college students now identify as something other than male or female. That's often associated with transgender identity. Now, that's still pretty high. The typical rate or typical number of people thought to be transgender is far less than 1%. So 3.5% is still very high, but it's important to look at that in context. That's down from nearly 7% in 2023. So that is a really good trend line. That data comes from a survey conducted by Eric Kaufman. He's a professor of politics at the University of Buckingham, and he says the shift is due to a couple things. Yes, cultural and political changes, the end of peak wokeness, but also I think it's important he highlighted the end of the COVID-19 lockdowns and improved mental health as a result. He noted that, quote, less anxious and less depressed students are left with a smaller share of identifying as transgender, queer, or bisexual, and as a result, he expects that number of trans people to continue to come down.
Mark, what do you make of this? This is great news here.
I don't know. Inside me, I just have this incredible sadness for this world right now with all this trans stuff. The sadness, and there's a little bit of anger too. The anger's not with the transgender people or those who are claiming to be gay or lesbian or whatever. It's with the Christian community. When we look at things like Nvidia and other companies that are trying to create a culture or trying to force culture on our culture that makes no sense whatsoever, that actually is abusive to people. It convince people that it's okay to think that you're something you're not, that you're a cat or a dog or a man when you're a woman or a woman when you're a man. These things are devastating. They're heartbreaking. They hurt people. They cause mental illness. And when other people come behind them and say, it's okay to do that. It's okay to be totally insane. We are, as Christians, are coming down to a point to where we're encouraging people to be insane. And they're hurting themselves because of it. Parents are hurting children. They're having surgeries done. Parents are hurting children. They're giving them drugs that will, puberty blockers that will change their life forever. We're seeing more and more reports about depression and suicide in these areas, and there's a reason for that. When you buck against the truth, when you try to deny the truth, there's always anguish, there's always depression, because the truth will not go away. It is a reality. It's created by God. It doesn't change. Truth stays truth. And it gets me so upset. We have a petition out there for Nvidia, a petition that said, we're not trying to tell Nvidia, hey, start embracing faith in Christ. All we're trying to do is say, Nvidia, stop trying to engineer our society with these things that harm children, that take advantage of those that are the least among us are able to take care of themselves. You know, it just gets me madder and madder when I think about this, because it would be different. You know, occasionally you hear, well, it's one consenting adult to another. What does it matter? Well, that's between them and God when it's that way and they're sane. But when it comes down to taking advantage of children, or worse than that, trying to convince them things are truth that aren't truth, and causing their depression to go deeper, causing suicide, chopping off parts of their body, doing these kind of things, it's just wrong, and Christians need to stand up. I brought up the Nvidia petition because what do we have? We have less than 1,000 people signing it. We have over 5,000 partners here at FISM. Step up, guys. I'm sorry if this is harsh, but step up. We need our voice to be heard. We need the financial world to understand. We need Wall Street to understand. Christians will no longer be silent on these things. Children are getting hurt. Lives are being ruined. Let's step up. Let's make this our stand. Let's stand shoulder to shoulder in Christ and speak the truth, and let's hold corporations accountable, because it's the corporations that determine our culture. It's all that money at the top. Follow the money. If you do, you find it's corporations that are funding all the movies, all the television shows, all the comedies, all the comedians that aren't funny, that are doing stupid stuff like encouraging these cultural changes that make no sense whatsoever and will do nothing but harm our society and individuals. We need to step up. We need our voices heard, and we need to move now. Don't just go out and sign the petition. Don't just send that petition forward. Take your laptop, take your phone, go to your neighbor and say, hey, I just signed this petition. Let's sign it together. You want to do it too? Walk around. This is worth it. This is well worth it, because our society needs us. God left us here right now, right here, to be the light in this world. Let's stand up. Let's shine. Let's make it happen. And I'm sorry for the rant. I just realized I got on another rant.
Mark, that was great. You were cooking, brother. I was going to let you. I just want to let you go. That was awesome. That's exactly right, brother.
Where were you when I needed you to anchor me back to the show?
I just let you go, man. That was great.
Seth with the fire extinguisher, right?
It's exactly right, though. I'm holding the fire extinguisher back. Here's the deal, Mark. You hit it right on the head. I want to hear your guys' thoughts on this, and people in the chat as well. This quote that I'm about to say, or this statement, tell me if you agree or disagree. Encouraging children to explore gender fluidity is sexual abuse of a minor and should be treated as such, both morally and legally. Right?
I agree with that. Yeah.
Amen.
Thank you.
Amen. It should be.
This is why we have this Nvidia petition, Mark. We want this to stop. We just want it to stop. No more.
And why whisper it behind closed doors in church buildings? Let's shout it from the hilltop. Let's be strong. Let's not worry about somebody not liking us because doing it. As an adult, as a parent, as a person who's supposed to be a leader in our society, God calls us to be leaders in our society. That means standing on the truth even when it's not good for us or even when it's not prosperous for us, or however you want to say it. Stand on the truth no matter what. And that's what we need to do. Please join in.
Well
I'm begging you to get on board and do what you know you're called to do as a believer. And be praying for those that are caught up in all this. They're being misled. They're being guided down a road that is disastrous. Be in prayer for them. Don't be angry with them. Be angry with us, with the church.
It's well said. And this is a way that we can step up, folks. It's so easy. That petition is live right now on financialissues.org. You just click that green bar at the top. Like Mark said, let's send this to everybody we know. Let's get everybody that we know signing this thing. We want Nvidia to know that we are not pleased. We have righteous indignation at what they've done, and we will not stand for it. Folks, 610-363-1110. If you want to call in, I know some of you have to leave us. The rest of you, we got a lot more financial issues to come on the other side of this break. Don't go anywhere. We'll be right back.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
When a woman comes into a center, she's being pressured from her family, from her friends, by her circumstances, by the rhetoric of the culture to believe that this is a quick and easy way out. If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity. And so we just encourage you to make a difference at whatever degree you can, whether you can do a $28 contribution for one ultrasound, whether you can underwrite an ultrasound machine for $15,000 or 10 ultrasound machines for $150,000. Where does the Lord have you so that you can make a difference?
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Financial Issues, 610-363-1110, folks. 610-363-1110. I do hope that if you are joining us now and you missed Mark's fantastic rant in the last segment. You'll go back and listen to it. It was really good. We'll have to get that rant clipped out, guys, and out onto social media, because, Mark, the message is a message of life and death, isn't it? I mean, it really is. People need to know about this.
It is. And I wasn't trying to offend anybody. What I was trying to do was say, wake up, Christian brothers and sisters. God has us here for a reason. Let's walk in those great words.
Yeah.
Truth in love.
Well said, brother. Well, folks, the major indices backtracked slightly from Monday's big gains yesterday. They digested several quarter three earnings calls. Yesterday, they were mixed. The Dow Jones finished up about 0.5%. The S&P was right at the flat line, and the NASDAQ a little bit below the flat line. The markets, as of this morning, have each opened not with a whole lot of change, slightly negative. The NASDAQ down about 0.25%, S&P right about at the flat line, a little below, and the Dow Jones slightly below the S&P, but higher than the NASDAQ. So that's what we're looking like for the markets this morning. Mark, let's get to some questions here as we got time. And again, 610-363-1110 is the number to call in, folks, if you want to join us. 610-363-1110. This first one, Mark, comes from Jay. He's 73. He says, hey, Mark, thanks for all you do. He says, I'm considering dividing my Roth IRA into multiple accounts. One is a primary account where beneficiaries are my wife, our children, charities, etc., and one for each of our grandchildren. The advantage is that I can open the grandchildren beneficiary account with a specific amount and invest at a risk level appropriate for a young person. What do you think of this strategy for Jay?
Well, Jay, I think you're thinking like a planner, and I love it. I think that it's very good to be thinking about providing for your children and your children's children. What is it? Psalms 13:22, I think.
Yeah, I believe it's, you know what, it's actually, it's Proverbs 13:22.
Proverbs, yeah. That's what it is,
yep.
yeah.
Okay, a righteous man leaves an inheritance, yep.
Yeah. So I think you're right on line, and you're nailing it. There may be some things that I would do differently because of who I am and the way I do things, but that doesn't mean you should do it this way. But let me just give you a little alternative to think about. By creating all these different accounts, you're going to have statements. I know they can household them if you do them all at the same place and that kind of thing, but you're going to have all these statements in each one. When you go to do the trade, you're going to have to go to this one, then to this one, and then to this one, and then to this one. I mean, if you have 14 grandchildren, it could, start being hard to juggle all that. And as we get older, sometimes it's easier just to make it simpler. You could do it all in one Roth, and you could just set aside a portion of that Roth. Let's say you have, and I'm just for ease of illustration, you have $100,000 in this Roth, and you want to give 10% of it to your grandchildren, and you have 2 grandchildren, 5% each. Well, you can make 10% of that portfolio aggressive stocks, high growth stocks, not income or defensive stocks or assets. And then let it grow like that. And you could even keep a spreadsheet or even a notebook and say, okay, we put X amount in for the children, for the grandchildren, and you could keep that growing, and then every now and then look it up and see how much it's grown to and adjust it there. And that way, when you do go home to your father, what'll happen is if it'll pass, obviously, all the control will pass to your spouse if they're still there. If not, then it'll be dispersed via what you have put on each of the accounts as far as the beneficiaries. So it'll avoid probate. It'll be simple, and it'll make things happen. Now, if you're the type of person who likes, there's a lot of people who like the envelope system for their budget, where they'll put X amount of dollars in each envelope for each section of their spending for the month, and that when that envelope's gone, they don't spend any more out of it. Instead of just saying, well, 3% of my income goes here, and then adhering to that. If you're the person who likes the physical buckets, go for it. It really isn't going to hurt anything. I'm just concerned that maintaining those accounts with trades, with reviewing those accounts on a quarterly basis, rebalancing them, looking at making sure the beneficiaries are kept up to date, those kind of things could get overwhelming for someone that maybe, I don't know, you're 73, so you're still young and going for it, but maybe in 20 years when you're 93, it won't be as easy to do, and maybe might be a little confusion. confusing to you. That's just my thought. But like I said, do it your way. It's a good thought. You're taking care of your children and your children's children, and I think you're honoring God with it. Do it whatever way works best for you to be the steward over those blessings God has entrusted to you.
610-363-1110. Mark, I appreciate Jay's heart with that also. I think it's great.
Absolutely. Yep. Wonderful.
Yep. 610-363-1110, folks. Craig is up next here, Mark.
Let's get those phones ringing.
Yeah,
the best way to get your question answered is to call in, and it's immediate. You don't have to wait for a week or 10 days, or sometimes we've gotten behind 2 weeks because those people who really wanted their question answered called in.
Absolutely.
So give us a call.
Yeah, super easy to do. 610-363-1110. If you've even got a Mark-esque rant that you want to share with us about your frustration with the culture, we'll take that as well.
Oh, I'm not going to live that down for a while, am I?
That's right, brother. Absolutely. 610-363-1110. Craig is up next here, Mark. He's 55. He says, hey, Mark, greetings. I favored Roths in the past. Now, I work for a city in Iowa, and evidently the state of Iowa doesn't tax IRA distributions. Therefore, I opened a tax-deferred 457B IRA, thinking I would save the state tax I would have to pay if I continued using Roths. But I'm questioning the initial state tax savings versus long-term benefits of the Roth. Do you have any opinions on this? What do you think?
I think it's a brilliant deduction. And in fact, if you would have asked me, I would have said, what's more important? Tax-free growth or a small little nugget from the state up front? Well, I would say tax-free growth. I think you're thinking correctly. The idea of the Roth is you aren't getting a benefit up front, but you are benefiting from there on in. And you're young again. You're, what was it, 55?
55, yep.
Yeah, so until retirement, at least 10 years. What if your portfolio doubled in 10 years and then you had to pay federal tax on that, on all those gains because you got a little deduction up front from the state? I don't think that it would be as nice as going into a Roth and taking advantage of that if you can, along with that other program. So I think you're thinking straight. I think you're reanalyzing and coming to the conclusion that long term, it doesn't end in 10 years. You're still going to have investments for, hopefully, I hope 30 years, 40 years of your life. And so better for the long term to do the Roth than the little state benefit. That's my 2 cents on that. If you like the benefit today more than the long term, that's between you and God. And like I always say, it comes down to the sleep factor. So you could go for it either way, but I personally would be doing the Roth as much as I could.
Awesome. 610-363-1110. Again, folks, Michelle, we see you in the call queue. We'll get to you in just a moment here. Mark, a quick question here before we get to the ag from George. He's asking, what's going on with CNR? Quickly, Mark, what can you tell us? What is going on with CNR?
Well, CNR is, they're having some issues, actually. I have to do a quick look up here. Let me dig through some of my papers and see what that would be.
While you're doing that, Mark, we're coming up to the ag here. Maybe we'll save your answer for the other side of the ag report.
Let's do that.
Yep.
Let's do that. That'll give me a chance because I remember some of the things going down with it. I just don't want to put them on the wrong company.
Yep. So, George, hang on there. Michelle, same with you. We got the ag report coming here and then more financial issues. The rest, you can hear your call up, 610-363-1110. Here's Craig.
This is Craig Haugard with your Financial Issues Ag Update for October 22nd. Well, corn really didn't have a story other than the rapidly advancing U.S. harvest. River logistics remain less than optimal as the rains over the weekend have not yet increased the level in the Mississippi River. In export news, U.S. FOB values continue to hold their discount to Brazil. And on the domestic demand front, U.S. ethanol margins remain very positive, and the trade expects another strong production report out today. Yesterday saw December corn ending the day 3.5 cents lower at $4.19 3/4. The soybean complex saw a mixed day of trading, with soybean oil reversing Monday's gains. Soybean meal was higher and soybeans closed slightly lower. Now, the market got off to a great start, but then at lunch with Republican senators, President Trump commented that the meeting with President Xi might not be happening. And that led to funds selling roughly 8,000 contracts, pushing November beans to close a penny lower at $10.30 3/4. Wheat continues to have a bearish tone based on growing global stocks, which really weigh on prices. prices. Yesterday, a weaker corn market added some spillover pressure. Russian wheat production estimates continue to increase. We had a report out yesterday increasing the projected production by another 500,000 metric tons. Minneapolis December wheat was 3 3/4 cents lower at 5.44 3/4. Kansas City declined by a nickel to close at 4.85, and Chicago was 4.5 cents lower at $5.25 per bushel. Cotton futures inched higher at the closing bell. We had December futures 26 points better, ending the day at 64.42. Livestock futures all surged to the upside. December live cattle futures were $1.77.5 higher at $245.42.5 per hundredweight. November feeder cattle improved by 80 cents, closing at $373.47.5 per hundred. And December lean hog futures were $1.20 higher at $83.27.5 per hundredweight. Class 3 milk futures saw their recent winning streak come to an end. At the closing bell, November futures were 4 points lower at $16.98. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110, folks. If you want to key your call up, we'll have time to get to you, but you got to get your call in probably in the next 2 or 3 minutes or so. So if you're feeling the itch to call in, maybe on the fence, just go ahead and give us a call. 610-363-1110, and we'll get you into today's show. Mark, let's get back to George's question in the chat there. He was asking about CNR. I'm curious to hear your answer on this, brother. What is going on with it?
Well, Core Natural Resources, they're in the coal industry, so along with the ups and downs of that, the regulations, the deregulations, regulations, deregulations, all the craziness of the international trade on it, all that, they had they actually had one of their major mines shut down at the beginning of the year, I believe it was. They had to seal it because of fires in it. I'm not exactly sure what that means or how or why, but they had to seal it. And then when they reopened it, and they went in and they did all the tests, make sure it was safe to go in and to start mining again. It ended up that there was gases that they needed to deal with, so they had to reseal it again. And it's supposed to open up here near the end of October, but, you know, it was supposed to open up 3 months ago as well. So with that production being down, it caused their revenues to drop and all sorts of issues. So we saw the stock starting to drop as well because of the analysts looking at the things that were going on. What's interesting though is they do have insurance, and they're believing they're going to recover 100% or $100 million. I think I forget what it was. It's just a lot of money they're going to recover from insurance for those mines being closed. And if the management's good and those things happen, we should see CNR actually start to come back. So there's two ways to look at this real quick. One is, it's the end of the year. If you got in recently and you got some losses, why not do a tax loss harvest? And if they do open up, if everything goes like it's supposed to, and we start seeing them getting back on track and the insurance pays through, then you could buy back in maybe after the beginning of the year or whatnot. Or if you just have that mindset that, you know what, I think I'll just hold on to this anyway, you could do that. The thing here, though, that makes this different is their dividends aren't that great. So it's not like we're holding on for the dividends. You'll have to really believe in the stock going forward. We think that there's a good chance of a turnaround, so as a long-term investment, it's a good idea, but I have no problems taking, if you have a loss in it, harvesting those losses against your gains for the year. I hope that answered your question, George.
George, thanks for that question, brother. That's great. 610-363-1110. Mark, we got a call from Michelle in Louisiana. Let's get to Michelle. Good morning, Michelle. You're live on Financial Issues.
Good morning. Thank you so much for taking my call.
Oh, good morning, Michelle. What's on your mind this morning?
Okay, so we are self-employed and we have a simple IRA account. Couple of questions. We want to move them from one company we have to another company. And then also they're with LP&L. We want to move it to a platform that we can start doing BRI. We have not contributed this year, so we don't know what we should do first, and if we do both of these things this year, will we be able to contribute this year?
Oh, okay. Let's see. We're in October. I don't know how long it'll really take you with the new platform to transfer it over. It could 10 days, probably at the least, because you have to set up the accounts there. You have to create the new documents there, all that kind of stuff. It usually doesn't take real long, but I've seen it take up to 3 months. So maybe a safer strategy would be to go ahead, make the contributions into the account. You can leave them in cash at this time as you begin the process of setting up the simple IRA at the new platform. But it should go pretty easy. Your advisor, broker, or whatever it is there, even the internal, usually it comes down to it's the internal helpers there that take care of most of the paperwork, even though it might be involved somewhat, but it should be pretty simple for you. I'm glad to hear that you want to move to a platform that will allow you to invest with biblical integrity. Thank you for that. God bless you.
Okay, God bless you. Thank you.
Thanks, Michelle. Yeah, Mark, it is encouraging to hear that for sure.
Yeah. Absolutely.
610-363-1110, folks. Again, you're going to have to get it in real quick if you want to call today. If not, we'll have to do tomorrow. But if you do it in the next 30 seconds, we can get to you. 610-363-1110. Otherwise, Mark, let's get to Dave. Interesting question here. We had some comments in the chat about this topic here. And in fact, Sam had mentioned an interesting headline about gold crashing down. Or Mark, maybe it was you who mentioned it earlier in the show. But Dave is asking, Mark, I'd like to purchase commodities as recommended. So, of course, we have our gold and silver ETFs, Mark, and he wants to balance out my portfolio. Both gold and silver are at 52-week, if not all-time highs. Now, of course, they're flirting with those, Mark. They're moving up and down as of today. But he's wondering, is it okay to buy them at their current really high price? What would you say for Dave? Dave's 65, by the way.
Okay, so first we had a rant. Now I'm going to go on a little bit of a rabbit trail. I read an article where Warren Buffett was saying that he doesn't like precious metals ever. They don't have income and blah, blah, blah. Income adds a lot to the return. And yet, here it is 52 weeks later or whatever, and we're seeing that gold and silver has outperformed, just done so well. But this is one of the flukes about gold and silver. that I think most people don't understand. It is not safe. You know, it does major swings very quickly. I mean, a year is not that quick, but it is quick. And it comes down just as quick, too, and harder sometimes in the market. Some of the larger drops in precious metals are hard. So when we say that we want to be in precious metals, it's usually because they don't correlate with the market. When the market starts pulling back, usually precious metals hold their value. And so it helps there. It also, over long periods of time, 10, 20, 30, 40 years, I'd say the 30 and 40 years, it is an inflation guard. It helps guard against the printing of too much money in our society. So that's what the use of it is. And if that's the way you're using it as a guard to help bring down the volatility when the stock market pulls back, there's nothing wrong with going ahead and starting to get into it. But at this point, even with the 6% or so pullback we've just seen, it really hasn't even pulled back to get back within its 10-week trading band, which is a shorter term look at where you'd want entry points at somewhere near the middle or below for an entry point to get into something. In a normal investing, even short-term investing philosophy. But with something like gold and silver, which you're using to help tamp down volatility during pullbacks of the market and or to help maintain value over long term for inflation, there's no reason not to be getting into it. What I would suggest is you do it slowly, one step at a time. Start dollar cost averaging into it over the next 3 to 6 months, or maybe take a third of if you're really anxious to get your portfolio built out, take a third of it now with this pullback and then start dollar cost averaging the rest in over the next 3 to 6 months. And that way, as it's going, if it does start pulling back, you are actually buying more of the gold and the silver as the price of it comes down. So you're doing exactly what you wanted to do, building a position that will help you offset some of those risks. There's my thoughts on that. Take it a step at a time. And no reason to rush in, actually, with the markets so high, with things the way they are, one step at a time. That's at the most, I'd put a third in and then dollar cost average over the next 3 to 6 months. Unless there's major changes in markets, then we'll update you on it.
Dave's a good question. Appreciate that, brother. Mark, we might only have time for a quick one here to close the show, but Amar is 52, and he's asking, how do I buy blockchain or Bitcoin, and are you planning on recommending a Bitcoin or cryptocurrency ETF?
Good question. I don't know if it's really a short question, but I'll try and shorten it real quick. You can buy it on a platform like Coinbase. I think there's another one, Kraken. Maybe, I'm sorry, there's another one, but I can't remember what it is. There's 2 or 3 of these platforms. That's all they do. You can buy it there and have it and trade it on those platforms. You also can buy, I believe there's a Ethereum and a Bitcoin ETF now on certain platforms you could purchase too. As far as me recommending it, it's still a wild west for those of you who have been with us for a while. I know you know our philosophy is long-term investing. I don't know where it's going. Nobody does know. Nobody would have ever thought Bitcoin would do what it did, but it did. But until we are able to look at it and see it as a valid long-term investment and not something that may drop 90% in the near future when people wake up to realize that it's not there. There's nothing there. It's just earlier when you said a paper, it's only on paper. This isn't even on paper. It's just in the cloud. Yeah. So until we can really measure the risk, measure the possibilities, have facts about it, I can't recommend it. I'm not saying don't go for it. That's between you and God. If you see fit to do that, go for it. Put a little bit in your portfolio. Use it. I don't see anything wrong with that, but I can't recommend it right now. But what I can recommend is that you always invest with biblical integrity. Always honor God with what you're doing. And that's why I'm so grateful you're with us today. And that's why I'm so grateful that you have chosen to invest with biblical integrity. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.